Good morning, everybody. Myself, Prince. Again, I am before you to discuss certain concept of inflation. In the previous lecture, I have discussed the concept of inflation and its types. And in this one, we will discuss about certain more things in a elaborative manner. So, first, let's discuss GSAC. What is GSAC? GSAC means government security. See, GSAC is a thing which is issued by RBI, which is issued by government on behalf of RBI to take loans, or you can't say loan means to increase or decrease money supply. It is being done. So first, I will simplify what is GSAC. GSAC is a sort of paper or bond which consists of term and conditions, which is having a tenure, which is maturity period, and time yield. These are the conditions for loan. So there are two methods of government to collect the money. First is it will print the money. If it is going to print the money, what is going to happen? The money supply will increase, and subsequently the monetary inflation will increase. I have discussed earlier what is monetary inflation. Comment down in the comment section. Now, monetary inflation. That's clear. Now the other way to do so is that government issues GSAC on the behalf of RBI. Sorry, RBI issues GSEC on behalf of government to provide the money to government. Here, what happens that the GSEC, which is a paper having terms and conditions, is being sent to the banks, and bank will give the money to RBI. Okay. In this case, what will happen? The money supply will go down. Means when RBI will sell the GSEC, the money supply will go down. And when RBI will try to purchase the GSAC, means that security paper, then it will pay some money for it, and subsequently the money supply will be increased. So it is the method to increase or decrease the money supply and to control the inflationary measures. Okay. So GSEC are of two types. One is short term duration GSEC, which is of short term, means 1 year, means 82 days, sorry, 91 days, 182 days, and 364 days. And next is long term, which is more than 1 year. It is also known as dated security, which is been done by, means there is sort of thing called SDL, state development loans, which is required for state for the development purposes, and they take the loan. Okay. Now, buying or selling of GSEC is one of the safest thing. Means why? It is an open market operation, correct? And it is safe like gold. Means see how it is safe. See, you have the papers and you can borrow money. You can sell it and you can borrow money. You can buy it. Means it is a sort of gold. Just like gold, you sell the gold and you get money. Same is in the case of GSECs. Okay. The next term is liquidity trap. What is liquidity trap? Liquidity trap is a condition when people are having a full of money, but they are not willing to spend it. During the COVID-19 situation, you remember that people were having money, but they were trying to save it instead of spending the money in the market for anything. So it is liquidity trap. Why it is done? Because there is a sort of uncertainty in future. That's why it is done. Our next term is inflation tax. Means what is inflation tax? Impact of inflation on purchasing capacity. When inflation increases, what happens? Our purchasing capacity goes down. Okay. So it is hampering the purchasing capacity. So it is called inflation tax. When inflation starts to behave like a tax. Quite simple. What is inflation premium? Inflation premium is a term which is a quite standard term, not we often used, but I will try to make it simplify. Inflation premium is benefit for borrower and bad for lender. What is happening? During inflation, you borrow money. At that time, the value of money is very high and you take money. And when inflation goes down, then the value of money will also subsequently decrease. For example, in the time of inflation, I have borrowed some money from you and I have what? I have purchased this thing. At that time, what will happen? This thing will cost high or low for me, come and down. And when you will return the money, then what will happen? Means, just to simplify you, at the time of borrowing and when the lenders give money to the borrower, at that time inflation is there and it's behave like a premium or benefit for the borrower. Quite simple. You can refer this example also which I have given. It's not clear, but make your own example. Next term is business cycle. Business cycle means it is a simply a graphical representation of how economy works. How economy works means how the things goes ups and down. Okay. Now let's have a look. Again, I have to refer a graph which I have to show to you. Suppose this is an axis. Okay. Clear. I will remove it and now try to understand. Just suppose here the things goes up and here the thing go like this. See, it will come like this and it will go like this. It is business cycle. This and this. At this point of time, when it is in the highest position, it is economic boom. When it starts to slow down, means it is specifically it is a term slow down. After that, it will come down to this line or below it, and this will call as recession. And very worst condition is depression. Now let's simplify it. So graph is clear. Now what is economic boom? Economic boom means economy has expanded. Expanded means it has much investments, much money in the market. It is economic boom. And slow down means economy has slowed down, means it has depreciated. Okay. Now the third term which was below that line, it was what? It was recession. Recession is a phenomena which you have quite heard in the news. Recession is when GDP shrinks to two quarters, two consecutive quarters, or you can say 6 months. It is called recession. And the worst condition is depression. Depression means GDP contract by more than 10%. It is called depression. And the worst scenario is that economy will collapse and everything will be shattered down. Now next term is point to point inflation. What is point to point inflation? Let's simplify it. For that same time frame, suppose I have two conditions. In 2021 I have purchased this pen, and in 2022 I have purchased this pen. Means, and in January month only I have purchased both the pens. So at the same point of time in the different years we will compare. Means here the time period is time frame, not time period. Time frame is same. Means point to point. For example, In February 21 and 22, the prices are what in means it says about point to point means January for 21, then January for 22, February for 21, then February for 22. It works like that. It is quite simple. Same time interval comparison. Next is methods to measure inflation. There are three methods that are GDP, deflator, CPI, and WPI. CPI consumer price index and WPI wholesale price index. Okay. Now what is GDP deflator? GDP deflator is implicit price deflator and it shows the deviation in price level of the entire GDP. Means how GDP fluctuates. It is been shown by GDP deflator. I have discussed already the nominal GDP and real GDP in the previous video. So what is the formula of GDP deflator? It is nominal GDP upon real GDP into 100. By this you can calculate the inflation. Now second method is CPI, consumer price index. It is having 3 to 4 things. Number 1, index is there, CPI. Number 2, base year is there, and number 3, the compilation is done by which organization. Okay, so let's have a look. First is CPI IW, means CPI industrial worker. It is having the base year of 2016. CPI industrial worker 2016 base year, and it is compiled by Labor Bureau under the Ministry of Labor and Employment. Clear? Next is CPI agriculture. CPI agriculture labor, which is having a base year of 86-87. Next is CPI rural labor, 86-87 again. And the fourth one is CPI rural plus CPI urban, which was combined in 2012. And it is compiled by CSO under MOSPI. CSO you can I have already said to you, and MOSPI, Ministry of Statistics and Program Implementation. Now CPI is doing what it is doing. It is used for inflation targeting by MPC, means Monetary Policy Committee. Take the frame of CPI and it measures the inflation. CPI majorly focuses on homogeneous group of consumers. Okay, done on retail prices. Now coming to the next, CPI measures retail prices on monthly basis and reflects the cost of living. Okay, and headline inflation is also based on CPIC. C means CPI combined, which was combined in 2012, which is under CSO under MOSPI. Okay, now let's have a glance to component of CPI. Means there are several components. Some data are there. I will try to call it. Number 1, food and beverages. Food and beverages comprises of 45%, housing 10%, fuel and light 6.8%, cloth and footwear 6.5%, pan and tobacco 2.3%, and miscellaneous means other rest than these products 29%. Okay. WPI. Now we will question WPI, wholesale price index. It measures the wholesale price on monthly basis, and first WPI was published in 1942. Okay. WPI is published by Office of Economic Advisor under Ministry of Commerce and Industry, and WPI covers only goods, whereas CPI covers both. Base year is 2011-12, and the most important thing, Dr. Soumitra Chaudhary was appointed to review the WPI methodology. Okay, what is the component of CPI again? We will discuss. So first is manufactured item, which is 64%, raw material food 23%, food and fuel 13%. Okay, have a pause. So next thing is producer price index. It is not in news, but we have to discuss it because uncertainty is there. Anything can be asked in exam. So producer price index is saying about measures of price from the perspective of producers, means जो उत्पादन कर रहे हैं उनके अनुसार मतलब प्राइस इंडेक्स क्या होना चाहिए. ओके. इन गवर्नमेंट ऑफ इंडिया इन 2014 appointed BN Goldar committee to examine and to replace the WPI by PPI. Okay, but obviously it didn't work. Now next is index of industrial production. It is a reflection of industrial production in our country. The base year is 2011-12 and it is by NSO under SPY. Components are manufacturing 77%, mining 14% and electricity 8%. Exactly this data we need to mug up also because it's quite obvious that it could come in exam, but most important is about CPI. We must remember the data of CPI, means I have also to remember it. IIP means industrial index production, means index of industrial production having core 8 industry. This is also important: electricity, crude, refined product, steel, coal, natural gas, cement and fertilizer. Okay, the weightage of core sector in IIP is less or more equal to 40.27%. Now here we come to an conclusion that how to measure or how to check inflation. There are three measures. One is fiscal measures, second is monetary measures, and third is administrative measures. Now come to fiscal policy. What is fiscal policy? What government is doing? Government is collecting tax from us and doing the public expenditure, है ना? So what is fiscal policy? Let's try to simplify. For example, a tax is there, any tax, direct, indirect, you can consider. When tax increases, what does it affect? When tax increases, demand goes down. Obvious है, आपके पास पैसा नहीं रहेगा तो what? Demand will go down and public expenditure will go down subsequently. When tax will decrease, मतलब जब टैक्स कम कर दिया जाएगा तो डिमांड बढ़ जाएगा, क्योंकि आपके पास पैसे रहेंगे तो आप खर्च करोगे, डिमांड बढ़ जाएगा ऑटोमेटिकली एंड पब्लिक एक्सपेंडिचर विल ऑल्सो इंक्रीज. नेक्स्ट थिंग इज मॉनेटरी पॉलिसी कमिटी. Monetary Policy Committee, or in short we can say MPC, was formed by RBI Act of 1934 and RBI governor is chairing this and it comprises of 6 members, 3 from the RBI and 3 from Government of India appointed, and in that 3 RBI section 1 is governor and it does the inflation targeting, which is 4 plus minus 2%, and when any major decisions are being taken then it requires quorum, means minimum to start the meeting, and in case of voting when the vote become tie because 6 members are there, so when the vote situation comes of tie then RBI governor will give the casting vote and it will give the decision. Okay, so basically this MPC was been formulated by Urjit Patel committee. Urjit Patel, you know, the governor of RBI earlier he was, nowadays who is governor, comment down. So it is Shaktikant Das. Okay, next is quantitative measures. What is quantitative measures? Means quantitative means how they can do the things, like selling of GSEC through open market operation, means government can sell GSEC and they can take the money into economy. Increasing the CRR. What is CRR? Later we will discuss. Now, as of now, I can say the full form: cash reserve ratio, by increasing SLR, statutory liquidity ratio, and repo rate, interest rate, and reverse repo rate or repo rate, whatever. Next is administrative tools. So quite often it happens in the market that the black marketing is there. Suppose the middleman, बिचौलिया जो होता है, बीच वाला आदमी, which often referred in Hindi, if I have to use the language, that is dalal. What they do, they just take the things, and for example, many of us are from the middle class family, and we do farming and all these things. We sell our crops, and there is one middleman who purchase the stock, and he keeps in the stock, and when the prices are very high, then they will supply that food. Okay, it is known as black marketing. So for that, government has done hoarding and essential commodities act 1958 to prevent the hoarding and black marketing. Okay, next thing is suspending the future trading. Means future trading means अभी आज का शेयर के बदले आप बहुत बाद का शेयर ले रहे हो, फ्यूचर का ऐसा ट्रेडिंग कर रहे हो, तो गवर्नमेंट इज बैनिंग दैट थिंग, सस्पेंडिंग दैट थिंग. फैसिलिटेटिंग सप्लाई ऑफ goods and services in case of demand pool. Okay, government will also in see, sometimes you might have seen the vehicle which comes and which is by the government officials only, by the agriculture ministry, and they will give you the onions when the prices are very much high. Now next term is reflation. Reflation means when inflation returns back after a spell of deflation, it is called in reflation. Okay, it is just opposite. Next and last thing is government of India measures. What the government of India does to control the inflation. As we have discussed, Essential Commodities Act 1980, prevention of black marketing. Government has taken in 2017 GST, goods and services tax, ease of doing business, है ना, and government stock holding limits, means government is trying to hold the stocks. By these things, government is controlling the inflation, and by all these things our chapter is been completed. So all the very best, keep studying, and I'm also going to study. Meet you in next video. Till then, bye bye. Jai Hind. Thank you.